Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity, the Broiler Chicken Show. Dun, 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 dun. I suppose at some point down the road I should get good at those intro things, theme songs and all that. Yeah, but I'm feeling kind of like meh today, so no real over the top clucking or anything. Just here we go. Anyway, welcome back to the show. This is our weekend frivolity. I do see a good 1,000 people or so watch this through the week, so I suppose we are touching some people. And hopefully making a positive difference. And if you happen to see something, the good part about a guy like me is you can actually put this on like 2x speed. So, and I just blab away and we just keep talking until all the questions are answered. It might be 2-3 hours, who knows. But actually, put me on 2x speed or whatever until you actually hear me talking about stuff that you might be interested in, then maybe you get a little value out of the offering. I like to actually think of this weekend show as kind of like my karmic give back PMA kind of attempt. I mean, it's an awfully difficult environment we're in right now. And sadly, I've been, because I live in this funny little internet world, I don't actually really interact too much with the people around me in this weird society here in Vancouver, British Columbia, Canada. And yesterday I had the privilege to go out and see what the actual, the masses, what kind of life they're living right now, and I was quite shocked. Yeah, a little disappointed. Wouldn't it be interesting to see how sort of the people, I know a lot of people that used to live in Vancouver and BC have sort of relocated over to the island. Be interesting to see whether that type of British Columbia that I sort of moved to back in the late 80s, early 90s, I wonder if that sort of environment still exists over there. Because it doesn't really exist here in Vancouver anymore. I was quite overwhelmed really at the amount of anxiety and just sort of tension that's out there. You wouldn't even know that this was Canada, to be perfectly honest with you. And I mean, it's been so long since I've been back east, but I wouldn't even be surprised if Toronto and Montreal are very similar. Anyway, fascinating. And the weird part about it is I've been really privileged to live in this funny little bubble in the internet world with all of you people, and I kind of make it explicit that if you're not really a nice person, if you're kind of edgy, then I don't really want to sort of hang out with you. So all the people around TRI, they're the nicest, sweetest people in the world, which I love. Thank you so much. I certainly needed that after my crazy life journey there 10 years ago. So that's just what the doctor ordered. So I don't actually have to interact too much with the outside world. And when I do, I'm shocked at how oh boy. It's funny. My wife, she used to always say that she thought at some point down the road that let's just say the tensions here in this melting pot here in Vancouver were going to boil over. I don't know. See how it goes. If anything, these weekend shows, like I said, karmic give back, a little bit of a rant. Like I said, put it on 2x speed. Maybe even just fast forward to about 20 minutes in, because I'm done my rant. I'm done my blah, and then we actually get on to doing stuff. But then I'll head off on a tangent every once in a while. But my apologies for the colorful language as well. Sometimes I just let it slip. I have a very laissez-faire attitude about life. If it's colorful language and it offends you, I'm just going to apologize ahead of time. Sometimes I slip. And I always like, the sort of Canadian. I think it's a Canadian trait that, Mike Myers, he made a living out of potty humor. And I always seem to find myself heading down that avenue and making funny, silly innuendo jokes and stuff. So my apologies for that as well. um, you know, is this sort of a 1 year coast to coast event? We just went the major crisis last year, and here we are, almost exactly polar opposite end of the universe. 1 year later, on almost everything, whether it be interest rates, exact opposite environment to what we were in last year. Through this crisis, whether it be the stock market, whether it be your beloved Bitcoin, and the cryptocurrency proxies. It just feels like this, these silly Jupiter Saturn crosses are so damn intense. And they're like, from start to finish, it's like 40, 50 years, about 40 years in duration. Could it be that through the apex of these, there's almost like this polar opposite yin yang sort of thing that has to happen? It wouldn't surprise me, It really wouldn't surprise me. Politically, the Americans have now, it seems, gone ahead and passed their sort of economic stimulus 2.0, I guess, here. So it almost feels to me like the market took the opportunity ahead of time to try and take advantage of the fact that they knew that, sort of this burr inflation, but not really inflation, more like depreciation of the purchasing power of the currency, which technically is inflation, was coming, and it was almost felt like all the commodity markets were front running this event. So, do we have a heck of a lot of traction following? The 1 year coast to coast for crude oil, that market didn't bottom until like late March, early April last year. So this might carry on a little bit. Which also implies that things like cryptocurrencies and your beloved Bitcoin could, maybe move a bit higher here for a sustained period. It's tough to say. I mean, the problem is with these kind of assets is, given location right now, how are you going to play this? You can't say that you're coming in on Bitcoin at 50 G's and buying value. I mean, anybody who is in the mining game, they'll tell you what value is in something like Bitcoin. Interesting, though. Maybe this might be a way to jack the cost of production up. But Greta, she might actually play a card in this to get that cost of production number up substantially. Because, of course, I think society sort of has her ear now, or maybe the other way around. Let's be honest. China and de facto China, whatever you want to call it, and probably throw India and Pakistan and, a lot of those kind of countries, they mine a shitload of Bitcoins. And a good chunk of their electricity is basically coal-powered. So you can make the argument that, the cost of production under coal-fired electricity power plants is, in my opinion, I think it's like, somewhere around between 5 and 10 G's or so right now for a Bitcoin. But, maybe Greta has her way here, and we can jack that cost of production number up to justify higher base levels of cost of production. I don't know. It'll be kind of interesting to see how that develops. Unfortunately, though, here's an interesting question about our society. If Greta arrived at the People's Congress there in Beijing and stood up on stage and said, your country is directly attributable. I think they say that Bitcoin mining now, the electrical consumption, this one sort of bitter 1% guy, a hedge fund guy who was sort of left out on the cold and left behind on the rally, he put out like this article in the UK and the BBC and all that kind of stuff, saying that the electrical consumption for Bitcoin right now is pretty much the CO2 equivalent production, let's say, is equivalent to like a Scandinavian country, which I thought was hilarious. The annual energy consumption to mine Bitcoin is the equivalent of like Norway or Finland or something. I thought that was so funny. So, Greta could have a field day with Bitcoin. Just be aware of that, people. Now, I mean, I was commenting, I think, through daily briefs and stuff about, is that hedge fund manager, does he really care about the environment, or is this just a way that he can try and get Bitcoin price back down so he can buy because he's bitter because he got left behind? That's another conversation for another day. But I do find it interesting that, the consumer always sees everything last. So the consumer right now has sticker shock about how the prices are exploding everywhere. Like, I went to the grocery, you go to the grocery store and it's almost comical how there were prices of some things on the shelves, and the weirdest stuff too. It's not stuff that I would have thought would have happened, but there's stuff on the grocery store. I knew that the price was X 1 year ago, and you look at the price today and it's double, and it's like, why did that happen? So I think that the consumer right now is going through sticker shock. Unfortunately, this is the end of that move, right? I would argue that the height of value was December 31st, 1999. And this is the very end process of going from value to invaluable. Valuable to invaluable. The only problem with that, though, is it a good idea to set your expectations of the future based on that premise that things are invaluable right now? I don't think so. I think this is the end of the event, not the beginning. And actually, one anecdote that speaks really well to that is this son of a gun. So this is the US dollar index. And I think you could actually make the argument this is going from valuable to invaluable. And frankly speaking, I was quite shocked at how much dilution of the US dollar they had to do to make goddamn sure that this whole damn economy fugazi didn't completely fall apart. But I actually think now we have to start thinking about valuable going forward. I don't know if that makes any sense or not. Ironically enough, this is the kick in the pants about this image, is that my whole thesis is the value of money actually bottomed here back at the end of 2017, beginning of 2018. So I find it fascinating that this entire event, sort of the end event, and I think this is sort of the public getting participation in the event. And this is actually that crazy Jupiter-Saturn cross event that happened. I wouldn't even be surprised if this image over the coming years kind of looks, Brian and his crazy heads and shoulders and fractals, it actually probably is going to look something like that. And this is probably our sort of our pattern over the next probably like 5 years on this silly thing. So, unfortunately, in this kind of environment, like what I think's going to happen here, and I think it's what triggered this guy to get all upset. This funny, this cab driver just went crazy. Is that what happened in 1980? It was fascinating, in that it was the exact polar opposite of the scenario happening today. in that time period, and I'm kind of ranty here. Like I said, if you're not interested, just fast forward till I get to. So, like, I didn't see too much Q&A. Either Grim is just an absolutely killer instructor, or we are just totally dropping the ball here with these students. But I don't know why this goes back far enough. I actually think that these Jupiter, Saturn crosses and the celestial events, especially this one with the Jupiter, Saturn, Pluto, what do they say? Billionaires respect, millionaires don't respect it, billionaires do, blah, blah, blah. JP Morgan. I actually think that this is the entire basis of how this thing works. And it's fascinating how it's very difficult to get information of these kind of assets on this part of the cycle. You notice most futures markets, when you pull up charts, they just don't give you that much information from previous cycles. I think they have the 10-year yield. That's a bit longer. Yeah, there you go. So this guy, at least you get data going back into the 60s. But I think if you actually look at interest rates, if you can get charts of interest rates over, like hundreds of years, Saturn, Pluto cross too, that's another one. I think this is actually the focal point of this whole exercise, sort of the cost of money. So the 1980 event, and it's so ironic and if you think about it, it just doesn't make sense. And I have a feeling that this is the whole Fugazi, and maybe Anunnaki. The story over this, the millennia, is that the humans were the slaves of the Anunnaki, and they had to pay an annual tax in gold to them. Well, one might argue that actually continues on today, and the banking class is sort of their conduit, skull and bones, those kind of people. And the banking tax, this whole sort of nonsense about inflation, deflation, and how inflation, deflation should dictate the cycle, but with the injection of the banking tax, what it really is a question of, we're going to devalue whatever the hell the asset is that we're using to lend against to do our banking tax, and we're just going to continually to devalue it until it's worthless, and then we'll cause a civil war or something like that. And a lot of humans will die, and the whole thing gets reset. We start a new currency, new debt system. Oh, by the way, how does the saying go? The winner, I don't know whether winner, I think there's a better word than that, agrees to honor the debts of the vanquished. So in essence, the bankers, they finance both sides, so they win-win. They're guaranteed to win. So fascinating. For those that would like an education, if you're just watching this for the first time, the Money Masters video series, gentleman did probably, that must be 20, 30 years ago easily, eh? It was great education. Really fascinating long-term look at how these... and it was so funny because the little cab driver that I was in yesterday, and this is what bothers me, is that the public now is absolutely convinced that the Rothschilds, and I thought this was hilarious, a cab driver is telling me that the Rothschilds own and control the Bank of Canada. And I'm like, okay. Yeah. And then, as a trader and a guy who's relatively educated, I would have liked to have him to watch the Money Masters videos. I would have tried to say, like I said, I tried to explain to him that it doesn't quite work that way. Rothschilds are probably the family, or whatever the hell the version of it is. They're probably a large percentage owner of, don't get me wrong, but I don't think any one entity would control them. It's probably more like a consortium. And actually, I was thinking about this the other day. You want to understand the way that the 1%, and I think they call them the technocrats, the way that they want the system to work is look at the way Canada is actually constructed and managed. It's actually an absolute, utopia for people like Klaus and an absolute nightmare for our neighbors down to the south. And they've been fighting this tooth and nail basically since 1776. But absolutely perfectly, and the term is oligopoly. I think it's the absolute perfect way for the 1% to run a society. Monopoly is an ugly word. Oligopoly, if you say oligopoly to like 20 people on the street, my hunch is people are going to think of like board games. They're not going to think of like really ugly euphemisms. Like if you say monopoly, you think, oh, big dictator. Rah. But oligopoly is, in essence, if anything, it's worse than monopoly. Because, like, in a monopoly, at least you can point the finger. That's the bad guy. But in oligopoly, all of the players try to remain anonymous. And as a result, there's nobody to point a finger to. So the Canadian banking system is absolutely perfect example of this. There's about 6 institutions. They have charters from the government, so basically nobody can come in and compete with them. They own the market. I mean, talk about a perfect setup, eh? I was looking at Bank of Canada rates. Actually, I found a really cool website I was surfing on the weekend. And just for fun, go look at collateralized debt obligations futures prices right now for Canada. Oh boy, big short guy. I think that's how he made his fortune in the States in the Big Short. I'll tell you, man, this Canadian real estate market, oh god. And that's another thing I think that triggered this cabbie the other day. I'm sure he's probably long these stupid Lego condominium shit that's going up here. And I actually looked at some of these units, and the floor plan sucks, and it's all very sort of, cookie cutter. Went to Kmart to buy the blueprints kind of thing. So, I don't know. I mean, the whole thing's a mess. I can't see this real estate story ending well. I'm not quite sure who they're building all this stuff for. But anyway... I thought it was interesting. I'm a big fan of letters of the alphabet, and the CDOs right now for Canada are screaming W's all over the place, which is probably not a good sign. So it'll be really interesting to see how many years I have left on this planet, and whether we can actually, and what my hunch is that this interest rate turn down here, and of course, it's going to be predicated on whether the 1% want us to actually see this or not. How interesting how, mysteriously, M2 money supply data supplied by the 1% banksters. We're not going to give you that anymore. You guys are asking too many questions about that, so we're just going to cut that off. Interesting. Oh, goodness. But anyway, my hunch is that this interest rate turn is probably going to look something like this. Now, this is what leaves you scratching your head about this whole damn thing. Shouldn't this theoretically be all about supply and demand? This is a yield. So that means when yields go up, right, like this, yield, right? If anything, what you want to think of is percent. What does that actually imply about demand? what it actually means is that the price of the bond itself, the actual value of the bond, is actually going down. But it's fascinating how, like, sites like CNBC and stuff like that, they never talk about the actual price of these bonds. So, and I was thinking about this, kind of a funny rant. I don't know, it doesn't really matter. In that, if yields are going up like this into 1980, that must mean that the bond price is going something like this, right? I mean, that's what has to happen. Price goes down, yield goes up. Anybody on the site who has questions about this, go watch the videos I put in the library. So, if price of asset is falling, what does that mean about the supply-demand dynamic? Demand must be weak. Supply must be strong. Either one or the other, right? But what happened here? 1980. Did a politician come to Washington and say, we don't need to balance the budget. We can spend more money than we have? Mr. Ronald Reagan. Now, doesn't that mean I'm going to spend more money than we have? That means I'm going to have to issue more bonds, which means supply, it's terrible supply is going to go up. So, how does supply go up in our supply-demand dynamic? How does supply go up? Demand, I don't know whether demand really changed all that much. Maybe it did. That's something I just don't know about. I'm just sort of musing out loud here. But how does supply go up? And then we go into Ronald Reagan and Reaganomics. Bush Sr. called it voodoo economics. And we've lived in voodoo economic times this whole time. This entire time has been all more supply, more supply, more supply. Not less. Like, we just live in this deficit spending world, which is a joke. So, how on earth then do we explain how prices of bonds have basically gone through a 40-year bull market? Right? If you pull up any U.S. government treasury bond, it's just like straight up over the past 40 years. And yet, theoretically, something changed here that doesn't explain this. I must be missing something in this equation, but something doesn't add up here to me. Something just doesn't make sense. Like I said, I must be missing something. It's fascinating. Anyway, sort of musings from the trenches. If anybody feels like adding to that thought in the comments, feel free. Including, Brian, that was a complete waste of time. You're a dick. Well, maybe don't swear at me, all right? Yeah, something I've been sort of trying to wrap my head around. Doesn't make any sense. So, if this is more about sort of Jupiter, Saturn cross, long-term cycle pivots, I believe now we actually have to transition into a 40-year cycle of rising interest rates, rising yields, and lower bond prices. And I don't think it matters what governments do. That's just what's going to happen. And I find it fascinating that, oh gee whiz, what a coincidence. The U.S. Federal Reserve now says that inflation is not a concern of theirs. In essence, that's basically saying, if interest rates go up and inflation goes up, we're not concerned. So guess which way interest rates and guess which way inflation are going. And the worst part about it is the consumer, they don't give a flying fuck. They don't care. Like what you just see outside your window. You would think if people really cared about consumers, they would have, through that COVID experience, said, okay, everybody, price freeze. Nobody's allowed to raise prices. Nobody's allowed to gouge the consumer. But just what I see is the consumer being gouged right, left, and center. Shocking. So, I don't know whether they're getting bent over, but they're definitely getting bent out of shape, I'll tell you that much. So, with that sort of thinking of those long-term sort of fractals and stuff, you can kind of see on the US dollar index, there's a bit of a gap here from back last fall, and there's also a gap here from just a few weeks ago. And my hunch is we got a foggy level up here against this level here. We got a couple trend lines that are also sort of pointing up in that area. I think this is sort of our ultimate destination on this move, but we could very easily pull back against these lows. And that's really sort of the basis of what I'm thinking about. And unfortunately, that doesn't really bode well for risk takers in the marketplace, I don't think. If this really gets out of control, foggies up top, and then, of course, insane face rip foggies all the way up here. So I could very easily see, though, a week or two of backfilling. And the irony of it all is everything that I sort of teach through this program. What do you think the odds are that that gap happens to line up with reload zones? Right? So I'm thinking that over the next week or two, we're going to go through a really weird period here. Remember last year's anniversary of the sort of stock market nutsiness was, I think it was the 23rd. We have a huge quarterly options expiry coming up here on the 19th. This is the 15th I think this is the Ides. I think it's the 15th, isn't it? Maybe somebody can correct me on that. The Ides of March, Julius Caesar, beware the Ides of March. Of course, sadly, maybe drop me a note of empathy. I'd appreciate it. But this is the 10-year anniversary of my wife's passing. A decade now. Feels like it was just yesterday. So this is going to be a tough time for Brian, no doubt about it. I can already feel like I had dinner with one of our local buddies here last night, and I could even feel sitting with him that I feel very uncomfortable in my skin. So I also noticed too out in society, like Mr. Cab Driver going off on the deep end, and I was actually with another cab driver the other day, and he was such a sweetheart, but man, you could feel that he was just under a ton of pressure. And other people that were planning on doing things kind of just sort of, they're kind of like, I'm just in this weird funk. I just, and I got a funny feeling this is going to sort of persist for us through this. I think the 1% know that, Ides of March, all that kind of stuff. And lo and behold, on the 19th, my good buddy Andre is keeping a real close eye on this stuff. Tells me we have another big EVU energy release event coming up through this. So my hunch is that whatever the sort of spring is going to look like, April, May, probably into June kind of idea, we got to get through this window here first before we actually see that. And ironically enough, I think a lot of the sort of trends that we've been kind of in place over the past little while, I don't see any reason for any of them to stop. Things like the S&P 500, Which chart is that? One of these screens. One of these screens is not like the other. Let's talk that there's a big open interest on the ES futures up at the 4,000 strike. Pretty big interest in the SPY options as well. You can see that this thing went and carved out a big, ugly, nasty looking, what is that? 1, 2, 3, 4. Is that, I wonder, David O, if you're around it, would that qualify for our Adam and Olga? Does that look like an Olga? Sure, that ain't no Eve, that's for sure. But I suppose you could argue this is the Adam and this is the Eve right here, but Olga stuck her big fat nose into the anyway. Excuse me. My apologies, Olga. So, and interestingly enough, you can kind of see how they've kind of set a base here. Maybe we get some sort of pullback and then a launch up into that expiry event next week. I could see that. I could also see, too, that, that's that stimulus announcement, I could see the market gap open and just churn its way up into this area. But my hunch is there probably should be some sort of, that's a pretty insignificant level. That's a significant level. We go back over time, somebody was interested there. Yeah, you can see. That's a pretty darn important level there. So there's probably going to, it's probably maybe like gap higher and then pull back, Wyckoff check kind of thing and then go. I don't know. So I'd be watching for that. I don't think the news that's going to sort of be at front page tomorrow, I don't think it's negative. Maybe some individual company or player says something, but on balance, that stimulus package and stuff like that, that should be front page news for the next little bit. And how does that play out? Obviously, this is never in a straight line. Try and hunt against lows. That's probably a really cool level to hunt for some sort of sharpshooter ES entry on the long side against these tails. Something like that. Interesting, watching the breadth of the market, what I noticed was, we won't get into that today. So, oil, oh Jesus, crazy oil just keeps charging higher. I got foggies up here in the mid 60s. Top of a parking garage up there in 68. This thing just looks like it's on fire right now. Insane foggies all the way up top here. And believe it or not, this actually is a massive A, B, C, D kind of thing. So, I wouldn't be surprised now. And it was interesting. That was a pretty important technical level there, and price just rejected that, just blew right through it. So clearly it wants higher. And again, there's that kind of thing where I think that the market kind of is front running, knowing that the politicians and shit are, and you heard fucking Powell himself say, they expect higher prices, they're coming. Sorry. And so they're just like, fucking, hey man, that just opened up the window. Let's go! And I think that's what's happening here. And I don't know. What scares me about this market is its 1 year anniversary from its insane minus $30. What does that mean? Does crude have to go to like $300 a barrel on this pivot? I would have never expected in my lifetime to see minus $30 a barrel. So be prepared. None of you should be short that damn USO or any kind of oil proxy ETF through this, because I got a feeling that that's what they're going to do now. Just like they fucked all the kids that were long those proxies and they just got absolutely destroyed. I think they could do this to the long side in the energy market through this event here. And somebody pointed out, when you hear Brian's voice at Jamie, When you hear Brian's voice go up an octave, that means, hey, that's something. Yeah, I know. And probably in your best interest to go fill up your gas tank sooner rather than later, because I got a funny feeling you might see just startling things at the gas tank this spring, which really sucks. Anyway. So, can they push stocks higher? Can they push oil higher? Yeah. I mean, I see they got the green light for both of them. Our bonds, I think bonds are a little happier now because of sort of the idea that the minimum wage isn't going to be jacked up. So that's probably relieved a bit of the pressure here. And now, of course, the Fed's got that ammunition, right? Stimulus package has been passed. Now Biden's just got to sign it, which means Powell's got the bazooka. The bazooka is now, the bazooka, I would say, is in the process. Like you got all the military. There's like 20 SWAT cars, and all the windows are blacked out. And then there's like a semi-trailer, and it's got a big tarp over it, and it's got the bazookas right in the middle of the trailer, and it's on its way from Washington, the Capitol Hill. The bazooka's making its way to the White House. The bazooka will stop before Mr. Biden's signature. Once that's done, the bazooka goes straight to Mr. Powell's hands, and they hand it to him and say, "Fire when ready, sir." So you can see, I can see the bazooka. You can see the bazooka's going, okay, I'm getting jacked here. And interestingly enough, too, right? The bazooka, I think, will be reflected in gold. If we see the bazooka go off, I think the gold takes off here. And in a weird sort of way, I actually see a lot of the gold stocks and a lot of the gold market is it looks like it's actually getting a little bit oversold, which is ironic. And the irony of it all is that technicians now are going to look at even gold and say, well, like even from a fund manager's perspective, I mean, I don't know where the hell the bottom is. Let's assume this is the bottom. All right, well, whatever. So, I mean, that's a 24% discount off of the highs. So that sounds to me like even if we just get a 50% retracement, then that's double-digit returns. Right? There's probably 50% roll somewhere in there. That's 12.5% return. That's pretty damn good return. So, could we see a revisit of 1900 here if a Fed bazooka goes off? Sure, why not? Seems logical to me. Back and forth. So, that's kind of what I'm thinking. Actually, I did go in and pick up another VCIM gold name recently here. So, I was just bumping along the bottom end of its range. I was like, what the fuck, man? Might as well go grab some. So, I wouldn't be surprised, maybe what happens here is like into that options expiry event, they get the stock market all nice and jacked. Of course, oil's just kicking ass. If we're lucky, maybe Bitcoin's carrying on with its upside inertia and sort of the risk-on camp, because on a daily basis, I kind of like to look at the market from sort of a risk-on, risk-off perspective. Does it kind of look like that's sort of it almost looks like it's like a boat out on the ocean that's listing heavily to one side. I mean, doesn't that look like that? I don't know. You tell me. What time is it? 11:30. Oh, jeez. House of Representatives has to approve Senate changes before going to President. All right, so the bazooka train has to make a pit stop over on the other side of Congress. Thank you, Kevin. Appreciate the bazooka. What should we call it? We should call it the bazooka convoy. Where is the bazooka convoy? Yeah, interesting. So gasoline is right up against the top end of its range there, Shane says. Bazooka. Hey, yeah, it's the bazooka convoy. I like that. I like the sound of that. So, this is again that sort of perspective that, I mean, is this a little one-directional? Could Could the bond market enjoy a nice little counter trend rally once Mr. Powell has his ammunition and he can actually go in and buy bonds because he's got something to collateralize? Yes, I think that's a very real possibility. Could the gold enjoy a nice dead cat bounce on the bazooka going off, i.e. them actually spending a whole bunch of money and diluting the currency, of course, diluting the currency base, and buying up a whole bunch of bad bonds that they'll just get thrown off into, the closet and forgotten about. Yeah, I think so. And then, considering my talk about Ides of March, passage of this legislation, could this be a buy the rumor, sell the news scenario right around this event? I mean, I guess according to Kevin there, the bazooka convoy might get a flat tire on the way from the House of Representatives to the Senate back to the House of Representatives. Maybe delay this a day or two. Who knows? Anyway, so the point here is it just feels like, risk. Like we said, oil looks like it's heading higher. Stocks look like they're trying to head higher, although I can't see a huge upside, especially with that massive 4,000 call strike on the ES futures. They're certainly not going to want that to go out hugely in the money. That would just be too expensive. And then, of course, your corn. So, what the hell? Why don't we segue on our way on into Cornland? Cornland tastes great. So this has been a fun chart I've been squawking about here for the past few weeks. It's interesting how I was given the privilege of sort of learning this concept called chaos theory about a year ago. And I didn't even really want to say, well, this is how you use chaos theory, because until I really studied it for a while. It's fascinating when you look at the distribution of chaos. Because it's certainly not just one number. It's just, it's the way the fabric of the universe is built. But there's multiple numbers and multiple equations involved in this. Actually, I had a super privilege. Two guys out of the UK who we still chat with, and they're on the site and stuff. Raf and Bobo did some great work on this chaos theory, and they actually added 2 other levels. There's 2.618 and then also 8.77. So the way I kind of look at this is actually all 3 are technically quote-unquote chaos levels. It's just a question of sort of degree of significance, magnitude, and then probably more importantly, especially the guy who loves... There was one guy about 6 months ago, we asked people to put down their notes that they take for watching these broiler chicken videos, and man, he if you're still out there and you're still taking notes, I'd love to see your section on chaos theory. Be interesting to see all the different notes that you took. But point here is that I think there's actually 3 different levels we have to keep an eye on, and they're kind of like degrees of magnitude. In a weird sort of way, just off of this consolidation here, you can see how 2.618 is our initial chaos level, then 4.669, and then 8.77. And, half of our job as technicians is to try and sort of ask if these levels would make sense from other perspectives. Like if we stalled out here in this, red box against this high, and that just so happened to be in sort of this area, and we rejected back down. Would that make sense? I think on balance, yeah. Would it make sense that really what this 4.669 is sort of telling us is what this would suggest is we're going to punch out and see if they run the stops, that kind of thing. against this high? And then, of course, is there any actual buying on the other side of that event? One of my favorite cartoons of the stock market, and I still haven't found about it. Geez, I've been talking to you guys about it for like 7 years. Is this Wall Street fat cat dude sitting on this big armchair where he's got his big top hat and he's got dancing girls from the 1920s on both legs, and they're drinking champagne, the three of them having a great old time, big lipstick marks on the side of his face. He's pleased as punch. And the caption at the bottom of the cartoon is, "And then we went after the stops," which I thought was, it's probably one of the best. Of course, the girls, they haven't got a fucking clue what he's talking about. But it's the best analogy of how a real trader sort of world works. In that, and I think I've shown you guys these charts before. Like this high right here, there's a bunch of stop loss orders just sitting right up there. There probably was a bunch of stop loss orders sitting just above that high. So you notice the market comes into that level, trips up those stop loss orders, ding, 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 ding. These are people that are short, and they have an order to buy the position back. So in essence, if I buy down here or even anywhere along here with the objective that I know that there are basically stop loss or buy orders sitting right here, if I just keep buying and buying and buying and buying, I can push price into those levels. And then as soon as I see those buy orders triggered the stop loss levels, I will sell everything that I bought on the way up into those sell orders. I will sell everything that I bought on the way up into those buy orders. So the public, they get stopped out on their awesome short idea. Right as the trader guy, he's the guy who's bidding this market up into this level. He's actually selling into their buy on stop orders. So it's classic analogy of Wall Street trading. It is so cliche. So it's interesting how Mr. Feigenbaum has said, well, according to the mathematics of what's going on down here, at this point, we're going to start to see price get chaotic. Why? Probably because Mr. Wall Street Fat Cat is buying. Why is he buying? Because he knows that there's a bunch of retail stop loss orders right above that level. In essence, they're short, and they have an order to buy back those shorts right there. So he is going to be buying. Is he going to be buying any more here? Anyone? Something going to change here? No? Nobody? Yeah, well. He's not going to be buying anymore. He's coming into the retail buy on stop orders. So now he is changing his behavior to selling. Mr. Feigenbaum would say that whatever the trend was, the power, the inertia, the direction, it was very powerful. And something has gone chaotic. In essence, something is going to change here. And I kind of like that analogy of, and then we went after the stops as a way to describe that sort of change. That Mr. Pro Trader, he's actually going to be selling here. These are not buy orders that are coming in here. These are buy on stop orders. Very different creature. And sometimes these buy on stop orders, oh my God, they get filled at the worst levels. So, really cool. I'm not even quite sure why I did that today. But fantastic sort of juxtaposition of ideas. If you can, listen to the market and try to understand what it is in the market dynamic that actually does change to sort of validate this idea of chaos. This is a one direction trend. When we hit this level, don't expect that trend to be the same. Something's going to change here. It's cool. All right. Blah, 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 blah. As you can see, my general sort of message to the public, and really, and not so much the public. I mean, I don't know whether the public listens to me or not. I don't think they do. And I don't mind that because, I'm salty and all that kind of shit, so that's fine. But my general message has been, I felt like 45,000, I guess, was a pretty good downside level. And 55,000 was a pretty good upside level. And we should probably expect some sort of consolidation in this range, and that's exactly what we're getting here. Also, too, the question will be, how does the corn react on the news of this stimulus? My feeling is, and I could be completely off here, we'll see, but my feeling is this should be a risk on, hey, we're on the road to recovery, we're going to support the market, but it might take the bazooka going off to actually get the market like really rallying. So kind of like what I said out of the stock market. I mean, I don't know. You might actually see that maybe it's, and as you said there on YouTube, we still haven't really, we haven't even actually got the legislation passed yet. I mean, this, typical Washington, this might go on another week or so, eh? Who knows? So I think in that environment, this is basically the playground that I think the market's in right now. And I guess the way that I would look at this, and this is hard for a lot of people, especially anybody watching YouTube and stuff like this, you have to understand that there are different market participants that have different motivations, and they're not the same as you. Every single person here is different, guaranteed. I mean, there might be a doppelganger out there, who knows. So the question really, if you're looking at the Bitcoin price and you're kind of like, what am I supposed to take away from this? If you're a hodler, then you're a hodler. I mean, do you really even care what the price of Bitcoin is? One Bitcoin's one Bitcoin. All the Doge fans out there, another sort of big sort of public person came out recently and said, I guarantee Bitcoin will be $1. So, or no, did I say Bitcoin? Whoops. There's a Freudian slip. He said Dogecoin. Dogecoin will be $1. Oh, Jesus. Might as well go buy some Doge. I mean, if this public figure is going to put his neck in the noose like that, you might as well. Have fun. I think they've taken the Elon Musk pump premium out of Doge price right now, so maybe a good time to take a look at it. Oh, I can't remember what the hell I was talking about. Sorry, everybody. Got off topic. No, it was another guy. The Real Networks guy. And frankly speaking, I never really... I mean, I suppose he's super genius, smart guy, but I never really saw what great he did. I mean, he built Real Networks, and he sold it to some major media conglomerate, and then he went and bought a basketball team. I mean, go out and buy a pro franchise. I mean, actually, there's fun stories from the Market Wizards books of how that was the aspiration of all pit traders, was to make 100 bars, and a bar was $1 million, and go buy yourself a pro sports franchise. So I suppose now you got to go make 1,000 bars. Anyway, I digress. So I think over the short term, this is basically our playground. Remember, we had that V top there in Bitcoin. And, the point of the matter here is that, V tops are V tops. We all know that usually markets, when they top, they kind of look like an M. So the rule is, if you see a V top like this, at some point, you got to expect this high to be tested. So that's pretty much exactly what I think is going on right now. As we said, little foggies are saying, you know what, we're going to go up and test that high in earnest, and we might even break to new highs here. We have lower sort of A, B, C, D harmonic patterns that are, gee whiz, what a coincidence, right up against this high. We teach students, this is what I like to call the institutional fingerprint, or basically where the smart money said, all right, enough of you going up, you go down now. The bar that made the high plus the preceding bar. So I would say that's a level that they're going to be super interested. What a surprise. That's 88.6. Remember I showed you a year or two ago, Carvarkinator, he bought 88.6 level and just looked like a rock star. So we got chaos, 88.6, A, B, C, D up top here. It's fascinating how we are fighting right now. This level, clearly, this was an old Foggenbaum 4.669. Off of like huge ranges. This one goes it's all the way down here, right? Which one is it? It's this one. And actually this is actually I don't know which one. I think it was this one. This was Kevin's guess for where Bitcoin was going to top out. He's looking pretty damn smart right now. But, if we get another big orgy wave to the upside, they're going to leave us behind. But these were Foggenbaum levels off of like long, big honking structural W's there. So, what do we got here? This one, boom, 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 and this one, boom, 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 boom. Interesting how off of the entire weekly one, 4.669 all the way up at 79 G's, and this recent one, which is what this was done off of this low, 877 is 79 G's. Interesting. Anyway, back to our short-term story, and actually this is fascinating. Look how we're following along this parabola so nicely now. I did draw the original parabola off of this low here, and it was interesting watching price come into those parabola levels, and then, basically hold the parabola and turn back up. So I just adjusted the parabola now to include those levels. You can see it's a little bit off of there now. But interesting how that also, our end of March scenario, this would be March 29th, right? So I don't know, maybe this accelerates and it just goes straight up here. Could be. So, this is all under the assumption, of course, like parabola kind of thinking, those insane upside objectives. It's all under the assumption that we rally up too foggy, probably consolidate a bit, and then move higher. What I did find interesting, and I even put a tweet out to this effect today, where I was kind of like, half of our job, and actually it's probably better to go off a lower time frame, half of our job as traders is really not to have an opinion. Try and find a trade setup that you like and then just trade it, right? And just live with the results. So, I did put a tweet out to this effect. We got this low here, 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 this low here. This market's had a lot of opportunities to dump. There's been a lot of windows here where, if they really wanted to dump this thing and break it, they had an open window. And they didn't. It just would not go down. So, a guy like me, at some point I start to say, well, if the market doesn't want to go down when the market's given the window to go down, what's going to happen to price if market's given the opportunity to go up, and the market will actually want to point up. That's sort of this kind of bought continuation trend kind of thinking parabola. I have no fucking clue what's going to happen here. I mean, I just don't. Sorry. I'm not going to tell you I do. All I'm going to simply say is I was funded as a prop crude oil trader using this bot trade setup, the ABCD, which, as I see it right now, I think the statistical odds right now are probably about maybe about 60-65% that we got a pretty good chance we're heading up into the 70,000 area here on this thing. What I do find fascinating, and I love this about this bot setup, and this is one of the reasons why I like trading it, because with these certain levels getting hit, a lot of the decision making just is taken out of your hands, and you don't really have to worry. And what a coincidence, the move stopped to scratch level, or you should not get hurt if this thing doesn't work, just so happens to be right at Mr. Feigenbaum's level. So what this tells me is, we've got, like I said, 1 low, 2 lows, 3 lows, 4 lows, 5 lows, 6 lows. But even following the lowest low, we got 1 low, 2 lows, 3 lows. We actually have 3 higher lows. I don't know whether I'd really feel comfortable coming in and just paying that price, but really I wouldn't have a problem buying that W. And you can see I've done Feigenbaum levels off of it. You want to maybe wait for a dip against these lows, maybe even that candle body low. We all know how much the market loves those candle body lows. And then maybe hunt like an inside bar or a fractal or something to get long. Seems logical. But if you are a Bitcoin bull, if you are a Bitcoin enthusiast, and you would like sort of a swing trade where, in essence, if the trade works, you get paid $3. If it doesn't work, you lose $1. I think actually you're getting presented a half-decent trade idea there. Now, the one thing that kind of bothers me about all this, and we'll know that this wasn't a bull and we've actually transitioned into a bear, is hopefully you see the bot level now, because we've had a pretty substantial rally back against these highs. I still think there's more to go, but we have had a bit of a rally against these highs. If we do actually go and fail through these recent lows, I believe our bull is probably over. It'll mean that we've lost the parabola in earnest. It will be that, the market is smiling. And it will start meaning that we'll have like trend lines and stuff if we're down here breaking these lows, that you really can't think bullish until we actually start Wing on the other side of this trend line. And that might take days, weeks, months. Heaven forbid she actually does silly things like normal technical corrections. We actually would like to just slowly wait for a nice consolidation and, W's through here. And if that's the case all the way down there, then it might take a while to actually get that W on the other side of that trend line. So, you got a pretty, what I like, and this is sort of what I really am seeing right now, and I guess the way that I would approach this is, this rally was just, TradingView's doing this now. This rally was just unrelenting. It just wouldn't stop. And of course, Jupiter, Saturn cross, stock market, Ethereum's going to change the world, DeFi, all that, right? I mean, it's pretty intense bull. And you just had to sit there and wait for this to play itself out. And it was so painful. And you just have to learn that you can't come in and chase this. It was just so painful to go through. There is sort of releasing some of that pain, that poor technical situation. And now, I think you can actually make the argument, if you were a bull in here, this is the irony of it all, is you see the bot setup, it's saying, hey, get long for 50 G's. The thesis of buying the market, all through here, ironically enough, is basically about the same price. It's just that, if you're coming in here, you just don't know what the hell this is going to look like. I mean, it could have been a lot worse. Thank heavens it wasn't. If anything, this is more like Collins' pump chaser zone kind of consolidation, which is good. That's bullish, right? This whole bot kind of idea. So, long and short of it here, I think with the stimmy kind of talk, with the relieving of this overbought condition, with the consolidation in price, actually, I don't mind the idea if you are a crypto bull. We've talked about risk on into the 20th, probably Ides of March. That whole market's moving in that one direction. That this is still a market, like pullbacks are buying opportunities. But, I think I started the conversation off and I never finished this point. You have to ask yourself, what type of market participant are you? If you are a hodler, and even now, just go and buy your Bitcoins and turn the price chart off, it's meaningless. It doesn't mean anything to you. And it shouldn't. Are you going to make a capital gain on your hodl purchase? Who knows? You're hodling. Who cares? If it's down 50% from where you bought it, who cares? I don't think you can actually couple hodl and portfolio management in the same conversation. I think they're kind of apples and oranges. If you, within the portfolio management context, I would just have a simple rule. For God's sakes, don't put more than 5% of your net worth into this thing, because you really don't want to fucking just get, face ripped to the downside. It's funny, Peter Brandt came into the crypto space into 2017 bull market, and I remember he had to sit there for probably about 4 or 5 months. I mean, literally from the summer of 2017 right through to the end of the year, with all of the crypto kids basically making fun of him, because him, as a longtime market participant, said, this market's going parabolic, and, it will end badly, and it usually does. And he was right. Anybody who bought north of 3,000 or 4,000, they actually had to see their investment go negative over the following year or two. But probably a lot like Brian. I think he's right, but he's probably early. I think it's the same situation now. Not a good idea to get into the business of calling tops or bottoms. Like I said, if you do start to see the market M out, well, respect the writing on the wall. Try and juxtapose that cost of production idea. I do remember, so what I'm going to just simply say is for like investors, and like that Mara stock is a perfect example. Where I was, quote unquote, investing at like 30, 40, 50 cents a share, and here at $30 a share, I am basically selling into strength, taking profits, realizing a very, very good return on my investment dollars. That was the whole point of it. You invest to actually see that money grow. So I guaranteed to see that money grow by taking profits. And that money has now grown. Now that objective has been achieved, and on to the next objective. Okay, I want to make that money grow again. That might be a whole brand new trade idea. I'd certainly buying Mara up top here. I don't like that idea for thinking about I want to grow my money in the future. And I would have to say, from an investment perspective, I do not like the idea of investing in Bitcoins at $51,000. Just don't like it. I would suggest if you're going to invest in Bitcoins, number one, there's a perfect window that you should just mark your calendars. Mark 1 year prior to the halvening event. So I think the next halvening event is 2024, correct? I think that's right. So my hunch is your Bitcoin price is going to give you your next investment window. Somebody write this down, because this is what the public really needs. Your next investment window will be probably mid-2023. That's 2 years from now. Jesus. Thank you, Shane. Appreciate it. I mean, I've been in this story since 2013. This story hasn't changed. It's exactly the same. And then, of course, like I said there, Peter Brandt, he's pointing out that when Goldman Sachs comes in and actually recommends buying Bitcoins, go look at what the price chart has done. Go look at when every time Goldman Sachs comes in and says they're going to make a major investment in the cryptocurrency space, go look at what the price has done. So, Goldman Sachs just publicly came out and said they're making another big investment in crypto. Jupiter, Saturn cross, all that kind of crap, right? If you don't believe in celestial shit, okay, fine. But, that's tangible shit, right? Go and look at when I came into the space, one of the first articles that caught my attention was Goldman Sachs put out a research article saying that Bitcoin was a buy at $1,100 US. And the price promptly went to $150 US. So, I worked in the investment industry a very, very long time, and we had a simple rule: if you ever hear Goldman Sachs telling the public to do one thing, do the exact opposite. Because they probably are too, the cocksuckers. They're just not going to tell you. Go big short, kind of stuff. There's sort of your bigger picture kind of view. Seasonal players. When I say seasonal players here, what I'm sort of thinking about is the people that like to play the market, buy when it snows, sell when it goes. Crypto, and especially like the altcoins and the junior part of this market, they love this window. I mean, I've seen fortunes made through these windows. The window usually starts somewhere around mid to late February. Oh, gee whiz, here we are. And it goes on till about, let's say middle of August or so. And you can see, once we get into August, the story changes, and it's sort of like the pumps. It's almost obvious that those are the exit pumps of the guys who started the story back in the spring. And somebody was even mentioning to me yesterday, they see exactly the same shit going on here this cycle. Last cycle, it was get on the hot list to get coins ahead of the ICO. Then, those people, they get a huge discount. Then the coin ICOs. And, of course, a bunch of people come in on retail and they buy it. And then the coin goes like 10x from there. If I'm not mistaken, I think the exact same thing is happening this go round in this DeFi space. It's almost identical. I mean, no, I'm not going to say. From an outsider, old man yelling at Bitcoin kind of thing, it feels identical. Of course, all you experts within the space are like, "No, are you kidding me? This is completely different." So hopefully you get that sort of that IDOs versus ICOs. There you go. And of course, all the ICO shit, that's what got this space in trouble last go round. What do you think? Do you see the table being set for some problems going forward? I can. It probably is that sort of condition that sets up the 2023 bottom in the corn. But we got a summer of frivolity ahead of us potentially. And I'll tell you, usually summers are pretty good for these altcoins. So, I'm not sitting here going, okay, got to load up the table now, because a lot of these names, of course, have already had substantial moves. This just happens to be one that I was looking at here today. To a certain degree, you've probably missed the boat on a lot of these rallies. Actually, you know what? I wanted to show you one that's a really, really cool demonstration of that Foggenbaum. If you'll indulge me for just a moment. Sjord, who's a fantastic fundamentalist within the space, he sort of clued us into this name back here. How do you think Sjord's feeling? Buying there at a nickel, and here it is at 46 cents. You think Sjord's feeling pretty good? Tell you, this Sjord guy, he's gonna fucking run the universe here. It's scary how powerful he's gonna be. But anyway, point of the matter here, fantastic fundamentals. And fundamental research. What's cool about this one, though, is, you can draw foggies a number of different ways. Look at this foggy off of this range here and how the market had to stop right at that level. I mean, how do you explain that, right? This is kind of what I think is going to happen. You saw, I can't remember what asset I was showing you. I guess it was the Bitcoin against the highs. I mean, look at that. How do you explain why that happened there? I mean, in essence, I'm a bull. Life-changing events. Oh, no, you're not. Hey, back down you go. I mean, that's incredible. How do you explain that? All I could say is thank you, Jojo, and thank you, Universe, for finally teaching me this. And I'll tell you, there's one guy who founded Interactive Brokers, and I watched a video with him like 20, 30 years ago, and he said, I trade chaos theory. So you want to get stinking rich like that Interactive Brokers guy? This is the fucking secret sauce right there, and I'm just giving it to you. I bet you if you pleaded with that guy to tell you, teach me chaos theory, and number one, he'd probably say no, and then number two, he'd probably charge you like a gazillion dollars, and I'm just giving it to you people. I sure hope history remembers me for this. I tell you, man, I spent probably 10 years trying to figure this damn chaos theory out, and I couldn't figure it out anywhere. I sure hope so, Shane. I sure bloody hope so. But anyway, that's here nor there. Anyway, what's so cool, check this out. If you actually break this chaos theory down even further, look at this. This is so fucking sick. How do you explain why the market stopped there? 2.618, right? Chaos expression. And then consolidate. No, fuck you, I'm a bull. Up to 4.669. Stopped. Consolidate, you got to get your act together. And here we go again. So the question is, let's see if you remembered. Where do you think I'm looking? And I feel pretty damn confident this thing's going to. It's going next. Let's see if anybody on YouTube can remember. Are you actually paying attention? No, I want a price level. Gotta meow through. See you, bud. Take it easy, Shane. Anybody on YouTube actually paying attention? Probably not. And I should leave the tutorial at this. This is such a great tutorial, man. It's incredible. Hey, Aditya got it. So let's see where that is. Take a guess. Let's take some guesses. Where's 869? Or, what the hell is it? 8.77. Raph and Bobo's level. Where is it? Jesus, it's high. Bingo. 73.9. So this will be a fun, whether we do it on the free videos for the public through the week or we do it on the site. I'd say there's a pretty damn high probability this thing's going up to 73. Now, I'm not telling you to buy anything. You all know that, right? I never tell you to buy anything. Would I actually buy that there looking for that? No. I mean, as I told you before, if you do your research and you come in at the right levels, you should be long from down here. That's really where you should be long. We're coming into the... And actually, this is probably a good analogy of the parabola. So, probably looks something like that. How do you get that to go? Anyway, something along those lines. But you can see it's actually accelerated, so it's tighter than that now. Something along those lines. You'd have to work with this and bend it into place and all that crap to get all the levels to line up here. But you can see it's something along those lines. So it's interesting how you can actually see how this is basically the market going parabolic into 877s. And this is the definition of like parabolic, right? You ever see, holy shit, market's going parabolic. So it should make sense that parabolic moves and 877s line up nicely. What do you think? Isn't that a cool tutorial? I tell you, man. I should actually charge people for this information one of these days. I don't know. All right. So, on that note, you ready for this? You guys are going to love this shit. What happens if I actually zoom out and think like Faugenbaums and parabolic moves on the corn? Hello. There's an 877 sitting up there at $79,000. So interesting how this bot wants us up here into 72. And quite often what happens with these bots is that this would be sort of a... where's the best way to do this? This would be like a symmetrical ABCD, where it's nice and pretty, universe is happy. Problem is that sometimes these ABCDs can be like 127.2s. They go all the way up here. And sometimes these ABCDs can be 1.618s. They go all the way up here. So I wouldn't be surprised if these foggy levels, that's probably 127 and that's probably 1.618. I bet. Let's see. Just for fun. Let's see, how do we do this? Probably go there to there. Yeah. And we'll go extensions. And 127 and 1.618. Look at that. Isn't that incredible? Yeah, well, Crypto Cotter, all I ask is that you say a prayer for me. Ask God to take care of Jojo and Liam. And hopefully I make some karmic credit. And just remember, everybody, this is Jojo's 10-year anniversary, so I'm going through a bit of a tough time right now. So it's probably better that I do give this stuff away, and then for God's sake, somebody save these YouTube videos, just archive them somewhere, and just make sure that we somehow make a positive difference in this damn world. Fuck. And of course, is Google going to promote this information? Are they going to want to try and make sure this message gets out there into the world? No. Fuckers. Careful. Don't bite the hand that feeds you, Brian. All of a sudden, click. YouTube feed's over. Don't. You got to have the library credits thing up ahead of time before you start insulting them, Brian. So, we love you, Google. Keep taking advantage of us. But for God's sakes, you people, right? Get this message out there. Anyway, so fascinating. Good old Raph and Bobo seem to line up nicely with alt ABCD. So, there's basically three very succinct objectives. Boom, boom, and all the way up here. What the hell number is that? 91 G's. Oh, geez, all the crypto kids go crazy. And of course, if we're thinking, I wouldn't really do this. I would, if I was doing parking garages, I would do it off of this range. Let's see what our parking garage says. So that's there to there. Oh, gee whiz. So now you can see, isn't this fascinating? So the parking garage concept, that extensions, all you level 1ers, you just learned this. So the parking garage extension levels, notice that 1.618 is going to line up nicely with that Alt ABCD 127. 200% lines up nicely with that 1.618, which lines up, these numbers line up. Isn't that incredible how that happens? So, this is that whole sort of, I talk about confluence. You want to see a whole bunch of indicators, a whole bunch of tools all say, hey, look, it looks like we're going here, looks like we're going here, looks like we're going here. And now, and I'm not saying it's going to happen, but, you've got your entry level. If we do get this push up top here, you got your 3-to-1 risk reward levels. And now, if we do power our way up in here, you don't have to sell all of your position. Maybe spoon feed. Have a third of it to go here, a third of it to go here, a third of it to go up here. And, you average your way out of the trade. But, so I think to a certain degree, this kind of conversation is probably more geared towards things like the speculators, right? And I kind of try to tell the public that this is not value. This is more like, hey, I heard Bitcoin's going up, and I want to take a shot, right? Now I want to participate in the story. Ironically enough, you had to have patience and discipline. You could have been that same guy, that speculator, but you had to. When we go through this kind of market state, you have to just leave it alone. And it was brutal listening to people say, "Oh yeah, it's fine to buy, keep buying, keep buying, keep buying," and then boom. So at least now we're not in that environment. And I think I've told you in the public before, like the whole reason for technical analysis is it identifies now a risk window. I've got a very identifiable, very crisp window where if I buy, I know, according to my technical analysis that I've done for a very, very long time, and hence my setup, that if I risk against this low right here, I've got about a 60, 70, somewhere in that area, % chance that I'm going to see that as an outcome. And as a trader, a speculator, this is the most important thing about this whole damn conversation. You're never going to be right 100% of the time. You just aren't. You just aren't. So, if I have to be wrong, I want to make damn sure that my wrong box is smaller than my right box. I mean, it's just that simple. This is the secret to trading. And yet nobody in the public ever talks about this. So, the table is set. We got the politicians jacked. We've got a catalyst window, options expiry, legislation that theoretically is going to be passed here. We got the Ides of March. We got the 1-year anniversary for the stock market, coast to coast. I think also, too, probably year-over-year comparisons. This is probably the absolute best window because, obviously, March, April, May, June last year, they were the absolute worst comparisons. So this is about as good as it gets. Once we transition out of this window and we start comparing, May, June, July of last year to May, June, July of this year, obviously we're going to see huge growth rates and all of the numbers shift. And actually, Powell is even saying that, right? He's saying you're actually going to see massive growth numbers now, and hence this whole idea of inflation once, as we transition from the economy fell off the cliff there last March, and all of the numbers were like just insanely negative. Well, now it goes the other direction. So put it all together, I don't think risk is over yet. Are they going to make this easy on us? Never. Mr. Speculator thinking about taking a shot here. Ironically enough, this is a tough one because it's sort of like, to make it easy on you, to be perfectly honest with you, is you just buy the 50 Gs and you say, look, if it breaks 40 Gs, I'm out of there. Just simple as that. Done. Well, that was easy. But unfortunately, that if you don't know what you're doing and you haven't traded like a bot setup, keep in mind, I've probably traded like thousands of these damn things over the years. I know how just sort of simple and cut and dry it is. What we often suggest for site members is kind of like, just pull apart the chart and maybe like throw on things like indicators. That might help you sort of subconsciously feel more comfortable to be in the trade. W's. You see more W's on more things. The more W's you see, the more confident you should be that, hey, buying this thing's not such a bad idea. So, heading into the retail open for the week. As we said, candle bodies look like interesting levels. That's a pretty hard low that they put in there. So it'll be interesting to see how the market actually that. If we do blow through that, then obviously this is a super, super insanely important low. If we go down to sort of indicator information, kind of wishy-washy. Nothing really to get too excited about. I like to hunt if you get, and this happens to be a 4 hour, so. If you're going to use something like an RSI, probably want to keep an eye on that kind of trend. And the problem with RSI, you have to be careful with it, right, is it can give you these funny little ooby-joobies. And ooby-joobies. And I don't really like using RSI because it leaves this open to your discretion. Okay, well, am I going to use that low? Or am I going to use that low? Or am I going to use that low? It's very discretionary. The way I like using RSI is these whole sort of like one low. Okay, well, that stops the bear. Then if we get another W, which really didn't come in very well here, that would have started a bull move, but that just looks like chop suey. I think probably your next W comes in here. Remember last week I got all upset at the German guys for going absolutely insane bullish down in here off of that div? On balance, I think they did okay. I don't think it was like, oh my God, market's going to the moon. But let's see. If they stepped in off of this div somewhere in this area, 45, and here we are, 49. Well, we're up 10%. That's not so bad. What I don't like is just in the short term, we didn't take out this high. But I suppose that's okay because we didn't take out that high in price either. So I think we're still, I would say probably your RSI sort of range kind of thesis is going to be banging around in here for the next little while. Does that sort of maybe imply a nice little deep test against those lows? And then, like I said, you want to get like super, focused, good market timing. Good old W's. They work the trick. Actually, a kind of fun illustration is we were mapping out at TRI. We've got Sjord's got the algos all firing away now, and we're just sort of teasing the site with information. So if you're going to day trade, I don't think it necessarily makes sense that you just force yourself to trade one asset. Go watch Anton Kroll's video in the library if you want more on why it's probably not a good idea to just say you trade one asset. And actually, Shark Toshi, are you here? Because Shark Toshi was even saying that he started pointing his algorithms at the more bullish of the sort of crypto universe, and his algos were really kicking it. So it'd be really interesting to see a study of that. Also, too, remember we talked about this before. I mean, crypto is trying really hard to buck the overall trend here, both in the medium term, like the big guys, and also even the entire universe. Whereas, the Dow looks like shit, right? And the S&P looks like crap, right? And the European stock market looks like crap. And the Canadian market's trying to turn back up. Actually, I wouldn't be surprised if the crypto data actually has to look kind of like Australia. I wouldn't be surprised, we had a big of a pop up there, and now we have to sort of bounce around in this area. So, yeah, well, I mean, you can see. I mean, maybe if we're lucky, little red here is going to put in a W. That would be sick. So, they're kind of bucking the overall trend. But if you sort of concentrate, like let's say I like to be long crypto, I buy crypto, that kind of stuff. Concentrate on the sort of the outperformers, and then your setups when they come in. Jesus, they fire fast, and so that's sort of what we're doing over the past few days, just following these little ones. Not that one. Maybe I got rid of it. That's too bad. I guess I did. Fudge. Anyway. I had a whole bunch of ones just the other day that were all flying. And, man, when the market was hot there the other day, these things were taking off. I thought it was interesting, actually. This morning, we saw just smatterings of some bullishness. This one was an interesting one from the other day. It was on the leaderboard list. But I noticed how quickly this trade developed, hit its 2-to-1, and then, boom, that was it. It was over. And we didn't see any traction following that. And, I've been blabbing away here for an hour or two, and you can see M's, it's kind of V-top. Emmy was watching this one for a potential bot here. We got one low, two lows, and then boom! They went and smacked this out. So it looks like that's off the table. This one here, man, it was fighting like a Dickens. Great analogy of maybe wait for that W on the other side of the trend line. Just couldn't get going here. And we also noticed, too, when we were looking at these things through the New York kill zone here this morning, the volume was just really suspect. So I would actually suggest that if you're looking for that Bitcoin breakout kind of move here, you're probably best to keep an eye on the market darlings and the market leaders. Because if Bitcoin and crypto is going to really rally here, these guys are the strongest ones. Some of them are DeFi. You do your own due diligence on the names, whatever. And if Bitcoin's a bull, then these things should be rocking and rolling. And like I said, actually seeing this leads me to believe that, hey, there's a little bit of technical damage. Here, look at this. Some clown came in and just dumped a shitload of this ARDOR there. So what I suggest to people is go grab that sort of top 5 list if you're a crypto fan. You can also do this in the stock market, and we have U.S. stocks, European stocks, Canadian stocks, Australian stocks, so we can trade almost anything out there, and this is the way you should probably approach day trading, right? Set up a whole bunch of bullish screens, like this would be a bull screen. You can see nothing came in here, so there's nothing to do. And then you could also basically go and do a bear screen, right? And set up a matrix of all the bearish names. And my hunch is there's probably some pretty damn juicy shorts in this list right now that are coming off. So anyway, that's sort of the day trader kind of conversation for you guys. I think probably, like I said before, I mean, looking at these assets, is this easy peasy mom and pop coming in, buying crypto, nice easy, make lots of money? No. We're very late in this move. So can't really chase a name like that. If anything, like I said before, investors are spoon feeding, sell halves on doubles, triples, quadruples, whatever. Speculators, maybe they were hunting some longs through here, who knows. But this is definitely not investment territory. It doesn't mean it can't keep going up. Never said that. But don't chase here, people. Please don't chase. All right. I don't know. Is there anything else to blab about? I guess I didn't really see any questions, and it's already 12:30 here. I've been blabbing away for a couple hours, so we'll probably just wind this up here now. Hope somebody got something of value out of that. I never know with these rants. And what did I do with that question sheet? It's around here somewhere. Is it over there? Nope. Over here? Nope. Here. Hey, there it is. Hey, look at that. We got a question or two. Hey, oh, look at that. Isn't that cute? That is so cool. Actually, I'd love to demonstrate how M2 charts work there, Fayer, but the Fed killed the M2 feed, and which sucks because I really like those studies. And TradingView. Maybe, Fayer, can you reach out to TradingView and get them to adjust their M2 data, because they're not following the right data set now. So M2 change by the Fed. So they stopped reporting this M2 money stock, which is what TradingView was using for their M2 study, but they changed it to M2SL. What's that stand for? I remember there used to be a Mercedes. You could buy a Mercedes, or you could buy the Mercedes SL. And SL what did it stand for? I don't know. Sports luxury or something like that? So is this the sports luxury version of M2 money supply? I don't know. But if anybody knows, and I don't know, maybe what does it say here? January, updated February 23rd, 2021. So they are updating this. But I think that M2, well, it says updated February 23rd, 2021. So I don't know whether they are still reporting this. You see, it says February. We're now into March, eh? So this one, that says January. So maybe like this is only like a quarterly. Frequency says monthly there. What was this? So I guess what they want to do is prevent sort of seeing the weekly data, and now they're only going to produce it monthly. But the point of the matter here is anybody who knows, if you are back in age to 21 now, how would you invest and react in the markets? Actually, I think I answered that question a week or two ago. Somebody asked me that question. So go back and watch, I think a week or two ago, somebody asked me that exact same question. And it went on for about a half an hour rant. So if anything, that's a great sales pitch to go watch other Broiler Chickens episodes from the past. So your question was in bold there. Sorry, I can't answer it because M2 money charts don't work right now. And it sucks because, man, that was really, really nice being able to talk to you guys with that way versus what they've done to us now. Jerks. Hi, Brian. Okay, so let's start up here. Hi, Brian. I'm still confused over the best location to draw fibs. You probably should just simply start. Your default should be 52-week range. And then, if you want to zoom out to like a 2-year range, totally fine. But the default should always be 52 weeks. And then really all you're really looking for is swing high and swing low. You want to use something like an RSI, overbought, oversold reading to determine a pivot high, pivot low. That works really well. I don't know whether there's really a right or wrong, but definitely a 52-week range is a perfect default. And then you want to use momentum indicators like RSI. I know Steven, he marks all his harmonic pattern anchors with RSI overbought, oversold ratings. So you could consider that. And then really, just swing high, swing low. Try and just feel for what the trading range is. If you are in the level 1 program and you're asking about this, really my suggestion to you is you just got to put a lot of miles under your tires. You now know what the levels are. So that was a big objective of the class and the school. You understand hopefully the difference between a retracement and an extension. As you mature as a trader, we can start thinking of extension levels as potential trade locations. But for the time being, I think it gets your highest probability trade setup is like finding W's in reload long zones or trading M's in reload short zones. Those are very, very high probability. Those trade location at extension levels, it's a little bit trickier to take those trades. And we don't really want to talk like things like harmonics with you until you've learned the basics about retracements and extensions, and you've had literally like 3 or 4 months after the level 1 of drawing tons and tons of studies, getting sort of the feel for how levels come in, kind of like what I walked you through with the Bitcoin chart and how chaos is lining up with parking garages, which are lining up with Alt A, B, C, D levels. Hey, confluence. Hey, this looks like there's this important level. And my number one suggestion to you is you just need time now to do tons and tons and tons of charts. Can you explain which high and low in a given trading range is best to base this study off of? Okay, well, I talked a bit about that. Yeah, I mean, hell, you could go back like 20 years if you want to. There's nothing wrong with that. It's not really like it's a right or wrong. Obviously, the longer time frame you look at, the more important the level is. I know it's more than an art than a science, but a little more clarification would be helpful. My suggestion to you is go back and watch not only the class lectures, your group session with Graham, and you also have the pocket tutorials that I did for Coinigy. Between, that's got to be like 10 hours of talking about Fibonacci levels. I don't think there's any point in going through a whole new sort of tutorial with you. There's tons of information there. Did I draw this correctly? Yeah, looks pretty good. Remember I told you in the actual lecture, I told you what to type on your chart. So why don't I see that actually typed out on your chart here? And if you type that out, like I explained in the lecture, then your question actually answers itself. What is it you're trying to study here? Does this actually represent like 60 to 80% retracement of this move? I think so. So I think if anything, Dr. M, what I want to see is why don't you have that typed out on your chart? Are you actually in the level 1 program? Did you listen to my lectures? Seems a bit odd that that's not on the chart. So if you want to add a follow-up chart just below it with the question on it, and then you answering the question, I think that'll be an excellent exercise for you to go through repeatedly and show me 10 charts where you draw a Fibonacci study, could be an extension or a retracement. You throw the levels on. You have typed on the chart that very specific question, and you have typed on the chart the very specific answer. If you can show me 10 of those and you still don't get that, then I'll even consider giving you a private tutorial and saying, what the hell's wrong with you? Sorry. But seriously, you want to show me 10 charts with the question on there and the answer on there? Then that'll show me that, holy fuck, okay, this guy's trying. And I'll make an effort to reach out to you to try and help. But I don't even see the question on your chart. Did you listen to the lecture? All right. Hi, Brian. Do you have any blue chip stock in your portfolio for the long run? We usually take trade on small stock and avoid the bigger one. 6 to 1, half dozen the other. Um, I do have a few stocks in my account that I've just sort of said I wanted to put away and try and forget about. But even when that happens, I really, if I see the price of the asset double, I got to sell half just because I want to establish that risk free position. And I have a number of different, if you're on the website Monday to Friday, then you see the daily brief. You can see I have a very diversified basket of assets. So every single day I'm going through my list, and you can see I've got everything from bull ETFs to bear ETFs to currency ETFs, and then these are sort of mid-size companies, some junior pieces of crap, and ironically enough, they're actually getting inflated to the point where they'd probably be considered like medium tier. Lots of little penny names. But, on my list, we've got more sort of blue chip. Hey, I traded this thing like the wind. I was so proud of myself on this trade here recently. So this was, I guess you'd consider a blue chip that I traded. But when I got to that level, I was like, screw it, man. Take profits. Let's get the hell out of here. So I didn't really hold on to any of him. This guy I picked up a chunk of because I think that this guy's like it's a trust unit, and in essence they're in the hotel and real estate business. I think this is probably an idea that I could throw into my registered account and just forget about it. Once COVID stuff is probably all said and done, then this thing probably just heads right back up to the old top of the range. You can see just in the short term, and there's this blue chip stuff, right? And I'm already starting to draw levels, so, stuff that I was accumulating here. If I start getting double levels, and you can see that's double, then I might I probably will be selling halves on doubles and stuff like that and just establishing risk-free trades. But I would just throw the free stuff into the registered account. These guys, before the crisis, paid a very, very healthy dividend. They cut the dividend. That's obviously why this thing collapsed, and it's understandable. Should people actually go back to staying in hotels and stuff, they'll just, go back to their business. I was in this... this is actually, I think, one of the bigger silver stocks around. Traded this quite effectively. Do I really want to hold on to any of this over longer term? I don't know. This is now a bluer chip Canadian company, even though they were giving it away at a couple bucks. I stepped in here. I still have stock on the books. I'll be, ironically enough, when I buy a stock, technically I'll be a shareholder forever. Because I never sell everything. I always have a little bit on the books. But here's the kick in the pants. Does anybody know who's the person who asked this question? What's the average annual rate of return of equity investing? Anybody know? Where's eyes over here? I guess that's you here. What's the average rate of return, Alessandro, for an equity investment? It's supposed to be 11%. It's supposed to be like 8% plus a 3% dividend. And that's supposed to be like outperforming. Ooh, fancy. So if I buy an asset and it doubles in price, have I done better than that 11% annualized rate of return? I was a bit shocked. Like, I did a demonstration account last year. I threw in just a whack of money. I had some RSP contribution room, so I was like, screw it, let's do this. I think I threw in the account like 80 G's. And sell half on double. Just make sure, don't take too much risk. And silly count ran up to like 150, 160,000 bucks, which is fine. I mean, great if you invested, great you double your money. But I only put 20,000 of that 80,000 into the market. The other 60,000 just sat there in cash. So that means that the account went to like 150 on basically like 60, 70,000 gains on 20,000 invested. That's ridiculous. You're not supposed to do that. So even on that $80,000, what should be a really good annual rate of return on that? Well, about what? 8,000, 9,000, something like that. So maybe the account's worth like 90,000 at the end of the year. Well, I took, now the account's got about $97,000 in cash. So that means at that rate of return, I've got about a 15, 16% locked in rate of return. I've outperformed all expectations. Oh, and by the way, I got about 50 fucking grand in stock sitting in the account free of charge. Doesn't cost me a dime. Am I ever going to sell any of that stock? Probably not. Am I a long-term blue chip investor? Probably. But if the damn asset doubles in price, it's just so far beyond what actually you're supposed to do in equity investing. Which makes this so much fun. I mean, hopefully you understand that if you play the game right and you just understand seasonality and you've got some money to work with, you can dramatically outperform. The key to this game is you got to be patient, you got to be disciplined, you got to wait for the windows, and then when the windows open, you got to jump. Yeah, obviously, don't take too much risk. And if your asset price doubles, well, I mean, what the hell? I'll tell you though, I have been thinking honestly about actually going and buying some government bonds in here, which sounds absolutely horrendously terrible. But that's sort of this kind of thinking that, what did I say? I got like $97,000 in cash sitting there doing nothing, collecting short-term rates, which sucks horsecocks. And, you start looking at the bond market and you start saying, okay, back, a year or so ago, I mean, the rate was like nothing. And, of course, this whole damn thing's ebb and flow, ebb and flow. So here we are. I mean, I don't know whether this is a bottom yet. Probably reload zones are down in here. But, through that 1 year anniversary window, if I start actually seeing W's start to form here in earnest, I got to tell you, man, I'm probably going to take a big chunk of that 97 grand, probably go buy some strip coupons. So, it's kind of funny. The guys who just, we're just going to have this plan. We're going to put it, I'm a bond king. I buy bonds. I kind of like giving myself flexibility. I mean, I may actually turn bond bullish here, but I got to see something like this, right? And, right there, oh my God, right? When you see that, whoo, right? But you can see we don't got that now. We don't got that. Whoo, good English, Brian. Me fail English? That's impossible. So, I don't know whether that helps answer your question. If the stock is in a good trade location and it's got a good setup going, I'll buy anything. In fact, actually, I bought some Lockheed Martin here recently. Oh my God, is that a blue chip stock? I don't know whether Alessandro even knew that. I think I post all my trades in the in Brian's big fat bot room. LMT. I mean, here's a boring. You can see I'm underwater. Hey, nice investing, Brian. So, but I kind of like this. I took a stab on this W, kind of getting bitch slapped here a bit, but I have to risk against these lows. So, I'm in the trade. We'll see how it goes. Kind of shitty location. I probably should be hunting here. I have, odds are probably going to get stopped out on that. We'll see how it goes. Trader's only as good as his last trade, right? It was funny, actually. Our algos, they spat up Davos through here, and we got a key reversal through here, so I was feeling pretty optimistic. But if this thing gets busted out, I'll walk away from it. And, regardless of whether it's blue chip, penny stock, I don't care if this thing breaks down. I'm gone. So Well, I'll trade. Hell, I took a trade in the CCL here. Remember, I bought this. Got stopped out here. There's nothing to do. I mean, I could have probably hunted a way to get back in here, but I'm happy just to sit and relax. And I'll see if another setup comes along. So I'm not really asset. I like these. I mean, hell, we had one stock in the crypto space that went from basically a penny stock to now it's blue chip. I mean, look at that damn thing. For God's sakes. I mean, I bought here, sold here, thinking, hey, I'm smart, range trader. I'll just buy it back on a dip and see you later. So now this is $100 a share. Is this a blue chip stock now? Is that what this thing is? So it's ironic. I don't actually buy the whole blue chip penny stock nonsense. These companies, they can be destroyed if they're a blue chip or if they're a penny stock. Equally, equal opportunity employer. So I've seen destruction in both. So I'm not really asset, snob. We've been watching Schlumberger. I like to follow Schlumberger. Halliburton's another big oil stock I like to follow. If I see a trade set up in here, I'll come in and take it. But the irony of it all is, if I can get a risk-free trade and throw the free stock on the pile, okay, that's one thing. But if I'm just trading like an ABCD setup and it works out to be like a 50% percent gain, then I'll probably just take the trade and take the setup and walk away. And that would be sort of like that little airline stock I traded recently. So I don't know. Hope that helps answer that question. Okay, I'm starting to run out of steam, so let's wind this thing up here. Hey Brian, I don't know if the W I've drawn is correct. Let's see what you got here. Boom. Boom, 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 boom. Yeah, looks fine. W is a W is a W. You might argue some people will work the W off of the clothesline level and say there. Other people like to use all price data. I'm an all price data kind of guy. So a break of that level is confirmation. And also, too, I like this. You get, like, multiple bar confirmation above this level. So, yeah. I mean, now, having said that, is that guaranteed that W will hold and you're guaranteed to make money? No. Not at all. Do I like the W? Does it look like a good W? Sure. Is it guaranteed? This is the floor? We will not go through this? Absolutely not. Hopefully you understand that. If this is on a divergence in location with the W, hey, I'll want to take a look at this. Alpha. Yeah, I'll keep an eye on that. Thanks for the idea. Or this. Well, both. I wouldn't do clotheslines and wicks like this. I wouldn't do it like that. If you're going to go clotheslines, then you got to go clotheslines off of here too. So the W would be very shallow. So hopefully you see how you've juxtaposed wicks and tails and clothesline levels. So choose either or. And if you're going clotheslines, W's, well then a close below this low here is puke out central. All right, hope that helps. That shooting star bothers me. I don't know if I should consider the wick or not. Well, and at the end of the day, what you have to do is you have to come to an understanding of what makes you comfortable as a trader. And your statement right there is, I am uncomfortable about this shooting star. So if anything, that's a good journal entry. If you're uncomfortable about shooting stars and taking them, then don't take them. Or maybe do a bunch of paper trades and just see what happens. And in this particular case, I'm sure you're sitting there going, yeah, see, I knew it, man. That Beamish guy, he's a fucker. Don't take the goddamn wicks, right? Because they suck horse cocks. Am I close? No, just playing with you. There's a lot of people that like to wait for the entire price action to confirm. but they're going to place their buy or sell order at the clothesline level, which I actually highly respect. I really love that kind of thinking. So maybe you might want to couple that. I'm not going to take this shooting star level. It does mean a hell of a lot of risk, having to risk all the way down to the bottom here. I'm going to let this come in, and boom, boom, we got multiple bar confirmation. Hell, you could take a fib from this high back down to this low and draw a reload zone. And my hunch is, you hear me talk about candle body lows for trade location, I bet there's going to be a sick-ass trade location right in here. The point here is you have to respect that the W has finally come in. Or, if hey, maybe this isn't a bear anymore and it might actually be a bull. That's the important thing to acknowledge out of this. The way I kind of like to approach this is sometimes these things will W and they just won't look back. So, do you have to spend all of your money all at once? No. Maybe split your order into 3. I'm going to work one order right at the breakout level. I'm going to work my next order at the clothesline breakout level. And I'm going to work my third order at whatever the exhaustion point of this rally is, a reload zone back to the bottom of this range. So that'll mean on this event here, boom, you just bought a third of the position. Instantly, 2 orders go in. This order at the clothesline level, and then this order at whatever the current reload zone is. And this order is going to have to adjust over time. Then you can see your first order now, to begin with, you were like, ooh, okay, maybe this was a good idea. And now you're like, oh, no, I knew this wasn't a good idea. But I still got my order here, so I'm actually rooting for this thing to do an A, B, C, D down into my buy order here. And you're kind of like, okay, well, I still want to buy more, so it's okay for it to pull back. And then, now that you have the swing high, you have your reload zone order, and it's probably sitting somewhere right in here. So you actually, 2 orders are working, and you're kind of rooting for the dump. But if the dump never comes and it just turns and takes off, well, you still got a bit of the position on. So that's I found for me, that strategy works the best because nobody knows exactly what the hell's going to happen in the future. And really all it is how the hell do I manage my way in here? And ironically enough, under the is it really worth all the stress category, you could just buy this level. Boom. Okay, the whole fucking trade's done. I got my stop alerts, whatever, down here. And, if it gets taken out, so be it. Turn the machine off. Set all the alerts, right? Whatever. On your phones and stuff. And don't think about it. So there's a trade-off there. How much work do you actually want to put into your trading? Are you a low work kind of guy? Or, hey, I'm a high. I love to keep an eye on this stuff. That's something that I can't really answer for you. But, as you go through your learning process and identifying what type of trader you are, how active you are, how much effort you're going to put into updating your plan on a daily basis, that kind of stuff, that should start coming across through all that exploration. All right, and then last, hi Brian, given the recent shenanigans at BitterX, do you have any recommendations for crypto exchanges in the United States where we can safely trade setups? I don't know. The problem here, I think, is that the venture market is very, very speculative unto itself anyway. I think that the speculative part of the market, bulletin board, pink sheets, that kind of stuff down in the States, is notoriously corrupt. And in a weird sort of way, they kind of like it that way. So actually seeing the Wild West action in the U.S. cryptocurrency exchanges, I think, actually makes a lot of sense. It's almost like they're acting the way that they want the venture cap, unregulated part of that market to act, i.e., can't trust those motherfuckers as far as you can throw them. Zach over in Hawaii, his choices are very limited. But of the assets that he's trading, he's watching all the Kraken names and anything that trades, fairly robust volume on a daily basis on that exchange. I think you could probably hunt setups, but, no guarantees from the management. I think the problem here is more a function of the asset class versus the actual sort of safeness of the setups. I mean, you just have to understand that if you're trading venture capital, it is highly susceptible to things like FU moves. It just is. Don't kid yourself. So what I would suggest, and Trex is fine, but just don't get caught up in their games. If you're going to buy something at Trex, LOL, that kind of stuff, fine, but on like the little junior piece of shits that only are listed on Trex, well, understand. If it's only listed on Trex, then they're driving the bus and they can do any old damn thing they want and you're basically at their discretion. So, maybe consider, is the coin listed on Trex and Binance? So then that way it's not brutally easy for them to screw you over. Then I'd also say, why not turn the tables on these guys? And ask yourself, since we know that they love running stops, and we know that there's a pretty well-defined W in place, which means that they know that this Beamish guy is going to be like, well, there's a W, so there's a risk window. So we know to a certain degree that there's actually a pretty high probability that they are going to run that W stops lows. So maybe as an experiment, put a little bit of your order at the original level, but instead of getting stopped out at the stop level, you actually place your majority of your buy order at the stop level. So then that way, when they pull their tricks and they try to run the stops, you're taking advantage of them running liquidity pools and you're getting cheap fills. I would also say too, just to really keep it simple on Trex, just don't risk too much money on any one trade. Keep the bets like maybe 1% of your stake, 2% of your stake. Then that way, if there's some horrendous FU and the whole thing goes tits up, well, so what? I actually like the idea. If Kevin told me last year we were trading at about maybe 5 to 10 trades a month. Which, that's not bad. That's like 2 or 3 trades a week. If you throw 1% of your stake at that and you look to double that, so to 2%, now it's a 2-to-1 setup idea, or maybe it's just to sell half on a double, whatever. The point is, if you win, you're going to take 2%. If you lose, you're going to give back 1%. 100 trades, I think Kevin was saying we're doing about 75% accuracy. Not bad. You just do the math, right? That means I gave the market back 1% times 25, so that's like 25%. But we took 150% from the market. So it's like 125% return. It's not bad. It's pretty good living. And that's only looking for risking 1% of your stake, looking for 2-to-1 risk reward. So that means if you're right, you take 2%, and if you're wrong, you lose the 1%. Really simple numbers. So I think there's probably not the best place to be doing things like day trading on Trex. I think Zach said that he's using Kraken now. It's sort of like a popular site down in the States. Unfortunately, I'm probably not the best person to talk to about this. And I think probably, quote unquote trading setups, it'd probably be better served at something like a site that's specifically designed for trading. So I don't know whether Binance is okay for the US. I think there's like a US Binance. I can't remember. Um, obviously, the regulators down in the States, they want to focus the traders, trading setups towards, um, I guess, Coinbase to a certain degree. That's probably got a pretty robust list. And, maybe we'll see the volumes come back on Trex. I don't know. Probably the bigger names on Trex, like top 50 cryptocurrencies, they're probably not so susceptible. It's a lot of the little pieces of crap that I like to trade. You can just blatantly see that they're manipulating the market. So that would be my response. Fortunately, I'm up here in Canada, so no, I don't really know as what markets actually you are allowed to or not allowed to trade in the States, which sucks. Okay, that's 1 o'clock, so I think we'll probably leave it at that. That was good by a couple hours or so. So hopefully you got some good information out of today's offering. Super cute little text, little message there. Isn't that adorable? Nice artwork. Super cool. Okay, so I don't know whether anyway, I said what I said. Hopefully you find some value in all that. If you are going to trade these bots, same thing as I said there a moment ago. It really all depends on how hard you want to make this for yourself. I didn't make this really simple, Brian. Don't overthink this. All right, just buy 50 G's and risk to 40. What is that? 43,000. So if you see 42.5 or something, then there's trouble. And you're looking for 72.5. Big upside. No idea if it's going to play out. But I've been trading bots so long. I mean, the levels. At least the good part about this is we're not in this sort of fluffy, insane kind of market state anymore. And as I said, if we give up that 43 area, then unfortunately that means there's major problems here, and this correction is not over yet. So be careful if we start losing this 43 level. Okay, I think I'm going to leave the rant at that. Sure hope you guys got some value out of it. Yada, yada, yada. Hit the like button, subscribe, ring Colleen's bell. Maybe go ask some of the YouTube shillers if they could maybe just tone down their rhetoric a little bit. And let's all try and make this world a kinder, a gentler place. Oh, and wish me luck with Liam. I like it when you guys wish me luck with Liam. That makes me feel awesome. All right, guys. Have yourselves a great day. All the best, and bye.